Honestly, I think it's a pretty good time to be investing. Whenever there's unexpected situations like what we were dealing with right now, that's typically a pretty good time to start deploying because valuations start to correct quite well. That's what we've been seeing. At least the start of the year was looking really solid. We were on track to be a better year than last in terms of number of deals, amount deployed, everything in BC was going up and to the right. And I thought honestly, like, oh, can't tell the future. I thought, things are gonna continue to be good until something crashes in AI. Little did I know what geopolitics was gonna hold in store for us. But when I look at the rest of the world, I was like, listen, like our region is probably the best position for the next decade in terms of growth, in terms of opportunity, in terms of things that there. So as a VC, when I'm investing long term, this really is the best place to be investing, and everything kind of points to the region in terms of the demographics, the youth uptake, the revenue numbers. In some areas our region is probably the best in terms of revenue per user and stuff worldwide. Things like food delivery and stuff. There's really, when you look at the overall situation that we're in here and you look at the rest of the world, there's always concerns everywhere, but when it comes to the region, I think we're seeing consistently a really attractive opportunity to invest long term in venture capital and technology related assets here in our region.
Hasan, Haider, welcome to Majlis and Markets.
Hi, pleasure to be here.
It's really nice having someone else called Hasan on the podcast other than myself, but it's really great to have you on the podcast. Just to kick off this podcast, everyone knows your background. You're very well known in the MENA VC ecosystem. So I don't want to talk too much about your background and everything, but I really want to get your thoughts on where we are right now in 2026. We're recording this at the end of April. And, it's been a bit of an interesting year, start to the year so far, to say the least, from a geopolitical perspective. We'll get onto that in a minute. But what are your thoughts right now on the current MENA VC ecosystem?
Honestly, I think it's a pretty good time to be investing. So we've been pretty active. So whenever there's unexpected situations like what we were dealing with right now, that's typically a pretty good time to start deploying because valuations start to correct quite well. That's what we've been seeing. At least 26, the start of the year was looking really solid. We were on track to be a better year than last in terms of number of deals, amount deployed, everything in BC was going up and to the right. And I thought honestly, can't tell the future. I thought, things are going to continue to be good until something crashes in AI. And I thought that was going to be the thing that led to a correction. Little did I know what geopolitics was going to hold in store for us. But I think, honestly speaking, whenever there are unexpected situations like this in any market, it's probably a good time to deploy. So we've been active.
Yeah, I was just about to say, there was an article, I think, at the end of December, where I think you spoke to Bloomberg and you were talking about the number of companies you wanted to, look at in Saudi and some of the sectors you were looking at. And I think Saudi is definitely an interesting one in terms of the VC ecosystem. But I was looking at some statistics. Obviously, there's been a bit of a drop in funding across the board in the regional ecosystem, although like globally, it seems to have picked up a little bit. But what do you think of the funding situation in the region right now? Do you think it's like going down, or do you think it's just being deployed somewhere else?
I think it really depends what you're looking at. So if it's late stage VC, what was happening is we started to see more later stage players from the rest of the world coming into the region, and a lot of that is on hold right now. So they're pretty cautious with the current geopolitical situation. So unfortunately, some of the global players are not as active as they should have been. And when it comes to the earlier stages where we operate, it's actually a pretty great market. It depends on the VCs themselves. Some are still active in deploying and looking at deals, and some are just wait and see. The thing that we've been seeing is that the more experienced the VC is, the more they've been through ups and downs, the more this is like, hey, this is a good time to deploy. The problem with the ecosystem in the region as a whole, though, is most of the VCs are still very new and nascent and haven't been through a lot of different situations like in the rest of the world. And so you see and pauses quite a lot in our region. I think as long as we see LP dollars continue to increase and come into the region, we'll probably start kicking back into more funding and more deals across what's going on here.
Which sectors do you think are going to do well in this kind of environment?
So it's really interesting. Like the sectors that have done really well already are the ones which are similar to COVID, allow people to do things online, e-commerce, things like that. Even some logistics plays have done well, last mile and stuff. But the really interesting thing to take as a lesson from sort of what happened with COVID is right now, travel, hospitality, real estate are all getting hit. But the rebound's going to be 2x. So this is probably a good time to find great founders that are really passionate about what they're building in those areas. And then just if you have the patience out, those are probably going to do really, really well.
And what markets do you think in the region are proving the most resilient in this environment?
So we've seen Saudi has been pretty resilient in what's been happening. And even the Egyptian market generally has been quite active despite what's going on. And honestly speaking, with the rest of the Gulf, the leadership in places like here in Bahrain and the UAE have just done an amazing job, like really tremendous, about keeping a sense of normalcy. So like things are still open, even at the worst periods, the malls were open and restaurants were there. Leadership were trying to keep us safe and keep things going. And so what you've really come out of all of this with a big lesson is that actually the way that the countries are run in the region has been super, super good and has been keeping us really safe. And so yeah, that was really good. We were always not really worried. I mean, of course, mentally, first 2 weeks it was an adjustment, but then after that, we're like, hey, we're pretty safe. Like we're taken care of. And so I think that's what we've been seeing. Like they've been trying to keep a sense of normalcy as much as possible. So despite everything, there's still deals and things happening in the UAE and Bahrain and other markets as well.
And Saudi, like I just mentioned at the top of the show, and with the article that was published in Bloomberg, which I'll link in the show notes, I think you were quite, even now you sound quite bullish on Saudi, right? Like, why are you so bullish on Saudi?
I'm bullish on the whole region. So that's kind of the thing, right? So I think when I look at the rest of the world, I was like, listen, like our region is probably the best position for the next decade in terms of growth, in terms of opportunity, in terms of things up there. So as a VC, when I'm investing long term, this really is the best place to be investing. And so yeah, I am bullish. Everything kind of points to the region in terms of the demographics, the youth uptake, the revenue numbers, you know, in some areas our region is probably the best in terms of revenue per user and stuff worldwide, things like food delivery and stuff. There's really, when you look at the overall situation that we're in here and you look at the rest of the world, there's always concerns everywhere, but when it comes to the region, I think we're seeing consistently a really attractive opportunity to invest long term in venture capital and technology related assets here in our region.
Even you say this, right, but like the economy in Saudi obviously has been impacted by what's happening geopolitically, and even before what's happened beginning of this year it was slowing down a bit. So but the thing I will say is, like, I wrote an article a couple of weeks ago about the IPO market. The Saudi stock market's doing really well since, even despite this war, right?
Well,
But from a VC perspective, are you encouraged by things like normal and like the development of the local capital markets there, which have improved the ecosystem, right?
yeah, that's been super good for us. Like, if you'd asked me a few years ago what your exit path would be, I never would have imagined that an IPO on the stock market in Saudi would have been one of our exit paths. But now, a bunch of the deals that I've invested in are all lining up to IPO in the next year or so in the Saudi market. So the opening up of Nemo, the Jahiz opening up the path for tech startups, and then Hasan and others starting to list on the main market, I think there's a great opportunity to exit. And it shows you that Saudi is really a great market for liquidity when it comes to late stage deals, especially in technology and growth. The market participants in Saudi reward growth, reward scale, and they're not just interested in steady dividend deals and stuff. So you're seeing a really interesting segment, a really interesting market to exit to. So it's been really amazing.
Which sectors in Saudi are you particularly interested in?
So our thesis is not really sector focused. We're kind of investing more in people. We're really early. We invest when there's not really much to see. We're pre-seed sort of investors. And so what we're really investing in is really good founders that building something new and different. And we started to see that in Saudi quite well. We see it across the region. So that's kind of the thing. It's really not about the sector, it's about the people that we find. As long as we find great entrepreneurs, we'll be actively investing in whatever sector it might be.
Yeah, because one of the things I was thinking in my mind is that, when you talk to international VCs, a lot of them say, yeah, there's all this potential that you're talking about, but the quality of the deal flow is still is not that great. Would you agree with like these kind of people who are saying that kind of thing?
We see about 1,500, 2,000 deals a year. And so It's pretty phenomenal, the quality of the founders, the opportunity that they're going after, the growth that they're building for and scale. And when you look at global comparatives, the valuations here are pretty reasonable as well. So when you look at the region, no, I don't think that's true. I think there is a great depth and a great variety of great founders and people that are building companies here. So anyone who's doing that hasn't really done their homework. Anyone who says that there's no deal flow in the region, they haven't done their.
How would you compare, like, say, the Saudi ecosystem to like the UAE or other ones? Do you think like it's still got a bit of a while to go before it matches like the UAE and other countries?
I think all the region is super nascent. When you look at the head start that other markets had to Saudi, it wasn't that much. It was a couple of years, right? So when you look at the region as a whole, it's still a very nascent market. So it's not like, oh, they're ahead or they're catching up. Or everyone's kind of building up at around the same rate. UAE's growing, Egypt's growing, Saudi's growing. Even smaller markets like Qatar and Bahrain and Kuwait and Oman are growing. You're seeing opportunities and growth across the asset class within the ecosystem within the whole region. So it's been really good to see. But yeah, I don't think anyone's like behind or ahead or whatever. I think we're kind of the whole region's growing at around the same pace.
You know, like we're in this environment, right? How do you think sovereign wealth funds and any kind of like non-conventional, VCs should look at things like startups, or do you think it still should be done by like these like specialized VC investors who understand the risk and understand the risk and the risks involved?
I think it's really important to find someone who knows what they're doing. When you're looking at people that want to deploy into VC but they don't do it full time, someone like a family office or something might see 20, 30 deals a year and they might end up doing one. We see 1,500, 2,000 deals a year and then we invest in 30 or 40. It really is about access and scale and to see the opportunities. And if you're not fully focused on this as an asset, you're not going to see all the opportunities and you're not going to see them early enough where they make a difference. So yeah, I think it's usually better for something that's nichey like venture capital to find a firm that you like working with, that is open, that gives you insights, gives you access, allows you to sort of interact with the founders that they're investing in and work through them rather than trying to do it yourself. And that's kind of what we do. Our LPs are all our partners and they get to see everything what we're doing. And they get to learn and they get to engage and fun as well. It's a fun asset class to be investing in. It's not just purely a financial return one. You
Yeah,
get to
'cause
interact with great people
Yeah, I was,
building
gonna,
great stuff.
I was just going to say, like, if you look at some of these Gulf sovereign wealth funds, a lot of them are doing like joint ventures with like other players to do like private credit funds, and private credit's going for a very interesting time at the moment. How would you say venture capital compares to say things like private credit or private equity?
I think it's still small, right? So the amount of funding that the region can absorb, like last year was about $4 billion that was deployed across the whole MENA region into venture capital. So as an asset class, the amount that can be deployed without distorting the market is still relatively small. Like for us, I modeled it out at seed and pre-seed, anything bigger than like a $250, $300 million fund, it just wouldn't be deployable. And so that's kind of where you have to look at it. Venture capital is a nice asset class to have, but it's niche and it's a smaller asset class in terms of the amount of money that you can deploy into. And you just have to understand that's the case. And so you should have it as part of your allocation, but it's more about figuring out how to access it in a way that makes sense for you as a larger firm.
One of the criticisms that people do say to me is the quality of data, and also the talking about things like failures. I don't think there's a good enough, or I don't know if you agree with this, but I don't think there's like a really good enough, publications or things like that which talk about failure or things that didn't work out. I've also talked to some Tunisian VCs, and they also said the same thing. Would you agree that the addressing of like say failures or when things didn't go right should be a little bit more out there in the open rather than just put to the side and it's mentioned in the footnotes of a pitch deck?
I think failure is really important. And that's one of the things that we've seen. We've actually reinvested in a bunch of founders, which their first startup didn't work out, but they worked hard. They were doing a really good job. And now we invested in their second startup and they didn't make any of the mistakes they did the first time and they've learned. So I think failure is a really great learning opportunity, but our culture as a whole does have a little bit of a taboo related to failure. So it's difficult to balance that cultural taboo with sort of the way that the VC ecosystem needs to know. Having things out in public so much, it's really easy for people that don't like VC to be like, see, there's a failure. Oh, the whole thing doesn't work. And so you kind of like also as a VC, you're like, okay, there's already so many points against investing in the asset class that people just can point at so many different things that more and more failures that are overly publicized might just distract from the opportunities that are in the region. So I think what's been happening now is, emphasis on potential successes has been good for our ecosystem, the way that things have been learning and maturing, and will help attract more people to the region. But everyone coming in needs to know that, of course, venture capital has a high failure rate, and it's not like, oh look, I told you it's gonna fail. Yeah, obviously most things are gonna fail. So it's not like take that as a grain, as like a point against the whole asset class. And so that's one of the things. You just got to figure out how to balance that. So for us, we're like, yeah, we know 60% of investments that anyone makes at early stages are gonna go to zero, and there's nothing you can do about it. You just have to be comfortable with that level of failure and loss, investing in this.
I was going to say, like, I think people don't always recognize the risks involved, right? Like you're actually taking equity risk in the founder, right? It's not just like giving a credit line or something like a bank or something like that. You're actually got skin in the game, right? Where his success or her success is your success is predicated on them doing well, right? It's like
Exactly.
you've actually got. So, but Hassan, I just want to also ask you, or just shift gears a little bit from the founder's perspective, and maybe also from investors' perspective. This AI digital native Islamic bank, Al Mal, I think they're going to be based in Abu Dhabi or ADGM, and they got a funding round. Well, seed funding of, I think, something in the region of 230 or 220. I'll double check that and put in the show notes. But it was one of the largest, I think, funding rounds for a seed company. What were your initial thoughts when that happened?
I was like, yeah, that's crazy. So it's an unusual thing that's happened. I don't think it's structured as a normal deal for sure. It's not a traditional VC structure or in any way, shape, or form. So I'm not really aware of how that was structured, but $200 million is bigger than most of the VC funds themselves in the region. So yeah, it's interesting development, but I don't think that's a trend or anything to watch out for in the region,
Why not?
because I don't think anyone else could do that. And I don't think, like, when you look at the whole VC ecosystem, most of the funds are probably at 100, $200 million in size. Even the ones that are doing later stage checks are probably deploying $10 million max. To do a $200 million round with the regional ecosystem the way it is, really, really difficult. So this seemed like more of a strategic tie-up. There's more to the story than this is just a seed round for sure. And so I don't think that that's something that can be repeated in our region. Seed rounds where we are $500,000 to $2 million in size.
Yeah, I mean, this one, it's not even live yet, right? The company. I know that he's got quite a good track record, and
Yeah,
the
he's
investors who.
done well for himself, and he's got a good network as well. I don't know how this is structured, but this isn't. I wouldn't take this as an indication of how the VC ecosystem in the region was growing or all thing.
Yeah, like I was just because the company's not live, right? And I still don't really understand what it means by AI native. We're an Islamic finance focused podcast, and I'm really interested in Islamic fintechs. I've been writing about them for the past decade, and this article I wrote about was off the back of this of the funding, and it was kind of asking the question: is why do Islamic fintechs, generally speaking, they don't, number one, they don't hit the mainstream for funding or the media, and number two, can they scale? I mean, do you have any thoughts of like why Islamic fintechs generally they don't get the funding that they need?
I think when you look at it, I don't know if I would agree with that. We've invested in quite a lot of Sharia-compliant related startups in fintech, and they're able to get the funding that they need. Startups like Money Fellows and NowPay in Egypt and a few other markets. There's a couple of interesting ones. I don't think that's the case. I think actually a majority of the fintechs in our region are probably Sharia compliant in one shape or form. So yeah, when you really look into it, they don't lead with we're a Sharia compliant, whatever fintech. But when you look under the thing, they're like, yeah, this is a Sharia compliant company. Like, why would you think of it otherwise? So I think it's just the way that the marketing is done more than anything else.
Would you say that if they did lead with that marketing, that would have a negative impact on their potential fundraise?
No, I don't think it makes that much of a difference in the region. Actually, it might be helpful for them if they're raising from family offices.
Yeah, because like I'm just wondering, like we haven't, other than this one, there hasn't really been that many. You can talk about Wahid Invest, which was a robo advisor from the US, so it wasn't really from the region. And you can talk about some other ones as well. But there hasn't been like serious like funding like this one compared to this one, at seed stage at least. So
Again, I don't think it. I think it's just an unusual situation. I wouldn't use this as a case study for anything. But we've got a bunch of companies in our portfolio that they don't lead with the fact that they're Sharia compliant, but they are Sharia compliant startups using fintech in different ways. So Lendo is one of those, pretty solid, doing quite well. I think at one point Tabby and Tomorrow also have Sharia compliant backgrounds, and they're the best performing fintechs in the region. So I think for us, when we're looking at fintechs, most of them do have Sharia compliant business models, but they just don't. It's not really. It's just table stakes. Like, yeah, sure, of course we're Sharia compliant. Like, why would we not be? And I think that's a lot
Do you
of
look
the
at
the
diff-
NPL.
do you look at them differently? Would you look at say would you look at an Islamic fintech? Say if there was an Islamic and a conventional fintech offering the same sort of product, albeit they're one's conventional, would you look at them differently from a value from a, like a analysis perspective?
No, not at all. Actually, our fund is mostly Sharia compliant as well. So we don't have a Sharia board or anything, but we don't invest in sin sectors, and we tend to look for more Sharia compliant related startups as well in the region. It's just helpful. Our LPs are also, positive related to that. So we have Al Jazeera Capital, which is one of the large banks in Saudi, and they're Sharia compliant as one of our LPs as well. So yeah, we don't put it everywhere, but yeah, we don't invest in sin sectors. Most VCs in the region wouldn't, and a lot of them are looking at the financial ratios to make sure that what they're investing in are typically within the Sharia compliance sort of guidelines and stuff. So yeah, that is actually what's happening in the region.
And then within Islamic fintech itself, it's quite a broad term. You can have
Yeah.
banking, you can have BNPLs, you can have other things as well. What sectors do you think really need more innovation within the Islamic fintech ecosystem?
I think within the fintech ecosystem as a whole in the region, there's a lot of areas to work on, even whether it's share compliant or not. There's the banks in the region have been an oligopoly for too long, and their service levels, both for corporates and SMEs, as well as individuals, is just not there. Like the products that they're offering, the customer service levels and stuff. So there's a lot of different areas to be improved, whether it's SME lending. So we invested in startups like Okta and Flend and a few others, or it's things related to consumer financing like Holo, which is for mortgages and things like that. So there's so many areas where the banking system have fallen behind and aren't really servicing the way that they should be able to now with technology. And so it's an area to be focused on right now.
And then, like by extension, do you a lot of fintechs also are domiciling themselves in places like ADGM and other things? What more could like regulators or like these financial centers do? I know ADGM has Hub 71. You can talk about DIFC and all these kind of other things. Like, what more could regulators do to try and create these homegrown startups?
I think that definitely what the Abu Dhabi government's been doing and what ADGM's been doing has been phenomenal. Honestly, the ecosystem there is quite great. With Hub 71, they've done an amazing job at sort of catalyzing that ecosystem through funding, through space, through programs, so a lot of different things. So I think what they're doing is pretty phenomenal. I think the area where the region still needs a lot more help and work is in sort of the LP side of the equation. So, encouraging investors to participate in venture capital is probably one of those things that needs to be focused on quite more. A lot of the funds have set up little pockets to invest in VC, mostly from like a strategic angle or whatever. VC as an asset class is still something that kind of needs to be focused on and added to more of the pension fund portfolios in the region. More of the family offices need to be participating. Private sector companies need to be encouraged to participate in funds and VC as well. So that part is probably the part that's probably still missing across the region, is really getting an active investor base that's participating in venture capital as an asset class, yeah, to generate real returns. So I think that's an area that's a focus that people need to work on.
And outside of the busier markets like UAE, Saudi, Egypt, which countries do you think would offer something? Which countries do you think most people will be surprised about to learn that there is like activity going on?
I think most of the smaller markets. So part of our thesis is to be really active and invest in smaller markets which are ignored by others. So Bahrain, we've invested in some great companies that have come out of here. One of my best performing deals was actually a Bahraini startup called Callo that has just done phenomenally well and expanded into Saudi. So that was a seed stage deal that I invested in here. And Even with Plus VC, we've invested in some great companies like Scene and Lola and a bunch of others. So Bahrain has great opportunity and has a great talent. The other markets that are really interesting that are smaller as well is probably Oman. There's great founders in that market. There's a lot of government support as well, and that's quickly emerging as a very interesting market for people to be focusing on. So we've been paying attention and invested in a bunch of deals in Oman, like Bayanat and Meded and a few others. And then Kuwait's always been a really interesting market. They've great creative founders like the founder of and Al-Aziz Lughani then founded Flowered, which I also invested in. So there's really interesting opportunities and great founders in the Kuwaiti market. Qatar, with what the QIA has been doing, has been really picking up quite a bit. So we've invested in 2 startups in Qatar as well. So we actually do pay attention to the smaller markets. It's a really interesting arbitrage. You can find great founders in every market and then support them expand into bigger markets as well, like Saudi or the UAE, and it just works super well. And in North Africa as well, Tunis done a bunch of hardware and deep tech deals out of Tunisia, which has been really interesting to see. So don't ignore the smaller markets. There's a lot of opportunity there.
Yeah, no, I agree. Like I didn't realize Tunisia had a big deep tech scene.
Yeah.
When I spoke to the VC, and also another one that I think people are not looking at too much is Iraq. I think Iraq could offer a lot of opportunities.
Yeah, it's a big market.
Yeah,
We've
it's like
done a
30
deal
million
there as
people.
well. We
Yeah.
invested in Toolmart in Iraq, and so they've been doing really well.
One of the things that a lot of founders do tell me is that, they can get the seed funding, but the bigger checks, at Series A, B, and then so on. Why do you think a lot of regional founders struggle getting like more deeper funding?
So Series A is available. I don't think that's really the issue. I think there are a number of funds, although we do need more, but there are a number of funds at the Series A. And so if you're able to prove your traction and your numbers and show that there's a market case for you, you should be able to raise your Series A. The Series B is when things get really difficult because there isn't really a lot of large funds that are investing at late stage. There's probably only a handful in the region that can actually deploy these larger checks. And so that does become quite an issue for startups in the region, is raising these larger amounts just purely because the funds don't exist that are doing those.
Is that when you like need to get the likes of Sequoia and some of these other guys from the US to come in, right?
Generally, at Series B, that's when you start to see the global players start to participate in our region.
And then Hassan, by extension, we're in the age of AI. It's made a lot of people, I don't want to say a lot of people's like skills redundant, but let's say it's changing or it's evolving or adapting. If a founder was coming to you, what would you look for as key things that would impact your investment decision making?
So honestly, like I'm looking for founders that have the passion and the ability to execute and get things done. I think that's the most important skill a founder can have. Other than that, something interesting, different, not like another Me Too of a startup that's already successful. I think those are the 2 key things that we're looking for, is something different, unique in terms of what they're building that hasn't been covered by a lot of other people, and their ability to execute and get things done. I think that's the number one differentiator between success or failure, is just speed and ability to get things done.
And do you pay attention to things like pitch decks, or do you look more at the founder and what they're doing?
Of course, we look at the pitch deck, but the pitch deck is just a piece of paper, so it's not that important, but at least shows us how the founders thinking about it, how they've been able to get to where they are, what they've been able to achieve so far. So it is a useful tool, but our decision usually is made mostly from talking to the founders more than anything else. So there are times where we've invested where the pitch deck was ridiculously bad, but the founders are phenomenal and they've executed and did so well. For a while, we've been able to invest, and there's other times beautiful consulting deck looks so nice, but you talk to the founders and they no ability to get anything done. And so yeah, I think it is really about just investing in the right people more than anything else.
So it's still quite human orientated.
Has to be. But what we've done with AI is we've done a lot of process automation for ourselves. There's no way for us, we're a small team of 10 people, to look at 1,500, 2,000 deals. So what we've done is we've made everything really efficient in terms of process, response rates, things like that. We've been able to use AI and generally just technology to make our lives much easier. We don't make the AI doesn't make the decision and at all in any way, shape, or form.
When I was last in Bahrain, which was a couple of months ago, on Gulf Fair, I was watching Biban, which was quite interesting, seeing a bunch of people. And this wasn't just in Bahrain, right? It was like founders from all different parts of the region
Yeah.
and the world, in fact. And you can compare it to Dragon's Den or Shark Tank.
Yeah.
Do you think like the culture or the understanding of entrepreneurship in the region has changed within the past couple of decades?
Yeah, of course. When I started, what, 16 years ago, I was going around to people and telling them, hey, we want to invest in founders and give them the money they need to start. They're like, okay, cool, we'll put all the money, we'll take what, 80-90% of the company. I was like, no, it's the other way around, we'll take minority stakes. And but they're like, but we're putting all the money in. I was like, the money's not the important part, it's their execution, their ability to get things done. And so the mentality was more of a trading business mentality before, but now we're seeing an amazing, like, people really believe in what's going on, people believe in venture capital and startups as an asset class. It's because of the success stories that have happened, you know? So with Kareem, with Jahez, with a bunch of these deals, it's led to people realizing that actually, yeah, we can really make money doing this. And it's fun and it's interesting.
Another thing that came into my mind, Hassan, was another criticism, constructive criticism, is that a lot of people say this region doesn't have like a good track record or a long established track record of exits. The one that comes to my mind, which I've told people before, is Uber acquiring Kareem. Do you envisage more like exits in the coming years, or do you think it will take a little bit more time?
No, of course. I think there'll be a lot more exits coming up. Now that the Saudi stock market's become a really interesting path to exit, we also have a couple of startups that are looking at Egypt and the UAE as potential exit paths. But when you look at exits in the region, it's not just about IPOs, it's also transactions and secondaries. And so for us at Seed Stage Investors, we actually have a pretty good, very active secondaries market in our region. Once a deal gets to like Series B, they're raising at $100-200 million valuation. The later stage investors are typically buying as much as they can, and so buy out earlier investors like us. So I've been able to generate liquidity. One of the deals I invested in did a 57x return through secondaries. I didn't need to wait for an IPO or anything like that. And so I think that's a path to exit that people haven't been paying attention to, because in areas like the US, secondaries are difficult for most VC funds to participate in because there's all these restrictions related to, SEC exemptions and stuff for venture capital. But in our region, we don't have those restrictions. So a lot of the later stage funds are pretty active at buying secondaries at discounts from the earlier investors. And so that's been really interesting for us. And I think, you gotta take a long-term view. Like every ecosystem at one point was like, no exits, there's no track record. Obviously, yeah. China was the same case. So if you're an early investor in these markets, that's where you're gonna make your money, is when you go in believing in that before the rest of the world does. And I think that's kind of what we do. So we gotta go in early and often.
I just want to zoom out and just look globally. One thing that's been on my mind for the past couple of months is Revolut, and they've been a really phenomenal success story. From a VC perspective, are you impressed with what Revolut's done, or were you not surprised, or what did you think about when they got the valuation?
No, they've done a great job. I think their execution's been phenomenal. They've been able to scale and grow and prove themselves. Early on, when they were first getting started, people were ignoring them, and like, people saw the deal and passed on it at low valuations. But now look at their success. Again, these success stories emerge from anywhere.
And do you think like they can replace some of these like legacy banks, or do you think it will take a bit of time?
I think it really depends on what they're going for. So I think a lot of the younger generation are probably going for more digital banks than they are for legacy banks. They don't want to go into a bank branch or talk to a human being or anything like that. So I think there'll be a generational shift away from the old banking system to the newer banking system.
Yeah, it's just I just don't get it, Hassan. Like this Revolut has been around since 2015, and it's got a valuation right now, I think, of something like 75 billion at the last fundraise, and before IPO in a couple of years it wants to be at 200 billion. That's like more than some like banks, long established banks' market cap.
Yeah.
And they haven't got that many. I mean, they got like they made what, £1 billion in profit. So I guess like they can raise these kind of funds at that level.
Yeah, I think it's with startups is really interesting. Once you get to a certain level, the money that's coming towards you is not really traditional VC. It's like other investors coming in at the later stages, sovereign funds and the like. And for them, it's just, yeah, $1 billion, fine. We can put that into a single deal, and see how that goes. And if it goes 2x from here, great. That's a success for them. And so they've executed well. They've done a great job. They're profitable, growing quite well. They're continuing to grow even at the scale that they're at. So I think it's a good company to be backing. And again, even at the later stages, that's kind of one of the things you're looking for.
And do you think like a lot of the global VC will be dominated? Because I was looking at the statistic last night that about 45% of the S&P 500 are now all AI companies or AI related companies. So do you think like a lot of the global VC will now be, or like deal activity and deal flow will be based on AI kind of orientated startups.
I mean, that's what we're seeing in the US, but I think that's probably a bit short sighted. There's a lot of great companies that are not AI startups that are not getting the funding that they need, which is unfortunate. I think what's really interesting to see is that right now, okay, sure, AI is a thing, it's a fad, but eventually every startup's going to have AI at some point in some part of what they're doing. And that's already a trend. Like when I see a startup, they're like, okay, we're using AI, but it's not an AI startup. It's building a software for X solution for this business, this market. And so it goes back to the thesis, the core thesis is like, all right, fine. You've got AI, but are you able to acquire customers and generate revenues? I think that it goes back to that all the time. AI will just make things a lot cheaper. It'll make things a bit faster. It'll make things a bit easier to acquire and scale. But at the end of the day, if you don't have a customer base that's willing to pay for you, whether you're AI or not, you're not building a company.
And the other big news that's been coming out the past couple of weeks is SpaceX is going to probably do its IPO, and they say it's going to be a 2 trillion IPO when it does
Yeah.
happen. What do you think about that? That could be the largest IPO in financial history. Apparently, do
Yeah,
you have
I
any
don't.
thoughts on that?
Yeah, dude, I don't understand numbers like that. I operate at the really early stage. We're investing, a few $100,000 in people that are just getting started. Those numbers like are crazy to me. I don't really get it. It's a different mindset to go and invest at that sort of stage. But if they're doing well and they're growing and people believe that that's what it's worth, and that's what it'll be worth at IPO. But yeah, it's just like to put things in perspective, to 2 trillion, the whole ecosystem, every startup in the region last year raised $4 billion. That's the whole ecosystem in our region.
It's like not even a drop. Yeah,
Yeah. So
it's not even 10%. Or like,
it's nothing. It's nothing out of that. So like our whole ecosystem in the region is like a fraction of a fraction of what that valuation is for a single startup. So yeah, it's not something I understand too well.
and one other thing, just sticking on the global side, because I got you here. But what were your thoughts when OpenAI bought this media company, this podcast company, which was talking about AI? A lot of people, if you listen to things like 20VC or some of these other mainstream podcasts, they all say like, it's to control the narrative of AI on the internet because OpenAI is no longer the leader, according to a lot of people. What do you think? What did you think about that when they bought like a media company?
That was quite a strange acquisition. I think I'm not really sure. I mean, the thing is, there's a lot of bolt-ons, and it's probably a fraction of their value to acquire a company like that. Might have been for strategic reasons, like to control the narrative of the media or something. Might have been because they like the team. Might have been just because Sam Altman loved the guys, and sure, why not come on board? So many different reasons. But yeah, it's not. It didn't look like it fell within their normal strategy to an acquisition like that. We'll see what comes out of it, I guess.
Yeah, I think a lot of people were saying like they should focus on, trying to be another AI leader rather than, buying media companies that don't really make strategic sense. But Hassan, just to close the podcast, where do you see the next 6 months going? Or how are you planning for the next 6 months for Plus.vc?
So at Plus VC, like we're currently working with our portfolio companies to make sure that we can get them through this period. And I think we're looking forward to things sort of adjusting after the summer, hopefully. So September till December is usually pretty active fundraising period and growth period for a lot of the startups. So you just need to get them there. And for us as Plus VC, we're still pretty active. We're looking at deals, we're deploying, and we're investing. We've done probably during this period, we've made probably about I think 8 commitments just while this war has been going on. So it's been a good opportunity for us. So we're going to continue to look for where the opportunities are, where the great founders are, what they're that are building despite of what's going on. Those are generally the best founders to be backing, and we're gonna build up our firm and our fund and continue to invest.
Amazing. And how can people find out about you and the fund?
Yeah, you can just find us on plus.vc is our website. So any startup that wants to apply, every application on our website gets reviewed. So that's kind of the first path for us to be able to review a deal. And anyone wants to reach out, I'm active on LinkedIn and other social media. Happy to talk.
I'll link it all in the show notes. But Hassan, this has been a great conversation. I really appreciate the time and the insights and the thoughts. And yeah, I hope the next 6 months go well for you. Hopefully we'll catch up then. But thanks
Yeah,
again for coming on.
of course. Thanks for having me.